Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel. Joel's not here. I'm so used to saying that. Joel's on vacation. Dennis Dick is with me this morning, and we will run you through earnings season. We have the banks. We have Johnson & Johnson. We'll talk about J.B. Hunt. Talk about that. We'll talk about big tech going to Washington again. Trump tweeting about Google this morning as Facebook, Google, Apple all head to Capitol Hill. So that'll be the story of the day, it seems like, is what comes of that. Probably nothing, but it's all sentiment, so we'll see what gets discussed. Today's guest, Nick Chahine, he will join us at 8:35, author of Create Income with Option Spreads, and we'll do a better job today of getting questions from our chats. I know we missed a few yesterday, so apologies for that. Dennis, what'd you buy yesterday on Amazon Prime that you didn't need?
Nothing.
Okay.
How much you spend?
I only bought one thing. I spent $35 on a wok that I'm told was actually going for $65, so I saved 50%.
So you got a deal.
I got a deal on a wok.
Did you need a wok, or you just wanted the deal?
No, I've been complaining about this for a while, so I needed a wok. I tried to.
What are you going to cook in the wok?
Stuff. I don't know.
But rice.
Yeah.
Sauce.
What does one cook in a wok? But
rice.
Yeah, exactly. But I thought for sure, Dennis, that you were going to be doing the gift card arbitrage. I bid on a few gift cards, but I was too late.
Tell me about gift card arbitrage.
Well,
maybe we'll get into this next year.
You
and ignore the nasally voice. I have a cold, a summer cold. Yes, July, and I have a cold. Thank you, 2-year-old.
The Prime Day deals. You buy a gift card, a $50 gift card at Applebee's for $40, and then you get $10 right there. That's
pretty good.
Free $10, but they
cash money.
But they sell really fast, so you've got to be quick when the deal's open to get them all.
So you get a $50 gift card for $40.
Right, and they have it for a bunch of places.
That's basically just like 20% off, though. Because
right,
I can't turn around, or if I could, if there was a market for the gift card that I could sell it for $50.
You can, if you want to wait a couple of days until Prime Day is over, you can sell it for $48. Make yourself $8. I mean, why not? You can do it. I thought for sure that you.
I don't know about your arbitrage, Mr. Israel.
Right, fine. My arbitrage, my gift card arbitrage.
I like real arbitrage though.
My gift card arbitrage needs work. Yeah. In any case, let's go.
So I'm intrigued, but I need a market for that $50 gift card.
All right. Let's get to the news today. We've got tech executives going to Capitol Hill, and as one would expect, it's on a lot of people's minds, including the president, who was tweeting this morning a quote from Fox and Friends.
Read us the tweet.
Read us the tweet. This is 18 minutes ago. This is a quote. Billionaire tech investor Peter Thiel believes Google should be investigated for treason. He accuses Google of working with the Chinese government, end quote. From Fox and Friends, Trump calls him Thiel a great and brilliant guy who knows the subject better than anyone. The Trump administration will take a look. There we go.
So, anyways, Google. I watched Google fall 15 points on this. It's still trading down. Actually, it's still down 14 points on this. GOOG, if you're looking at that. There's also GOOGL, obviously. But I don't know. It's getting to a point of ridiculousness, really. I mean, when you think about this, like these tweets, this movements to individual stocks, do we need our president commenting specifically that, hey, this sounds pretty good. We'll take a look and see if we can charge Google for tweet treason. I mean, I don't know. Maybe the general public wants to hear that. Maybe that's how he's going to get the votes, but I don't know. It's ridiculous. Anyways, Google fell. You can't argue with the Trump Twitter feed. Like I said, I have it on my screen here. Designated spot, especially when I'm at my regulars. I've got a Trump Twitter feed that is refreshing, designated, because you can't miss these tweets because they move stocks. Google down $10 on it.
Yeah, and today of all days, not a coincidence.
There's going to be a movement on these stocks here. So who's on the hill today?
We have got Apple, Amazon, Facebook, and Google. The biggest the biggest of those is probably going to be what comes out of Facebook, because we know the FTC and DOJ are grilling all 4 companies for the varying investigations they have going on, but Facebook is also going to get grilled about Libra and their cryptocurrency, and
that'll be the interesting one.
that exactly.
Because that will move. I don't know the other ones are going to move that much on it, but Facebook will be interesting. What are they going to do? Is it looking like they're going to let them, or are they going to really be hard on them with the Libra? Because we know Facebook has been rallying on that cryptocurrency for, I don't know if you call it cryptocurrency, but their currency. It's rallied probably $30 off this. So it is significant. The stock is trading just flat here this morning, but I think you will see some movement off of that one. I think that's going to be the interesting one.
Right. I would agree entirely. And it's really it's a question of like how hard do they come after Google or Facebook? Yeah. How hard do they come after them?
Yeah. I mean, are they going to be able to stop them? I don't think so. It's not going to be a matter of stopping them. It's going to be stalling. Can they stall? And slow it down? And are they going to try? Or are they going to just? It's going to be interesting. We'll just say that. So that's the one. So we have Facebook, Google, and who else on the hill today?
Amazon and Apple. Not the CEOs, but just various executives. The Facebook hearing will start at 10 a.m. Eastern time, and it will go. Actually, there's 2 days of Facebook hearings, so it'll continue tomorrow. But that's the biggest driver here. 10 a.m. Eastern. Tune into your C-SPANs.
Is it 10 a.m. Eastern or is 10 a.m. Eastern? Not
10 a.m. Pacific.
That's what I was wondering.
1 p.m. Eastern.
1 p.m. So that's when we'll see some movement there. Are they all on the hill at the same time here? Like all going on? They're not in the same room, obviously.
No, they're not. I honestly don't know.
Okay, so we'll find out more details about that. But anyways, today, expect some movement. I would especially think in Facebook.
1 p.m. Eastern, put your C-SPANs on or your CNBC.
Yeah. Even my nasally voice annoying me, so I'm going to apologize for it again. This cold here overnight, killing me. I'm blowing my nose. I'm sneezing. I didn't think you'd get colds in July. I thought like July, well, it was like July and August, the summer months were like free months that you don't get sick.
I mean,
the 2-year-old got sick like 3 days ago, and she's just blowing boogers everywhere. And I expected that I would probably get sick because of this, basically blowing boogers on you. And not surprising, now the whole family is sick, all 4 of us. So fun day here.
Fun day.
Show must go on, though.
One day at the Dick household.
It is.
All right. Let's go to. You want to start with the JB Hunt from yesterday after the bell?
Yeah, let's do it. Let's do the earnings. Do them.
To this morning's reports. JBHT reporting yesterday after the close. Q2 EPS of $1.23 versus $1.35. Sales $2.26 billion is in line with the estimates there. So a mixed report for JBHT. Last I checked, they were trading up. Something happened. They must have said something on the call that I missed, because they are trading up 8% here.
Yeah, it's funny. They hit it, and it goes to show you not always the headlines are not always right. So we know there's headline trading machines that knock it down. They knocked this thing down to the 88 handle last night, and it bounced back quickly. I'm not sure if there's something I'm reading the tea leaves or what it was. It looked like a flat out miss when I saw the headline go by there too. Glad I wasn't trading it, because I probably would have shorted on that headline as well. But when you dig down and obviously there's stocks that, and this is a different story too. I mean, these transports have been under pressure. I mean, I've been seeing my Twitter feed saying, "Oh, the transports aren't participating." Well, they're participating here this morning. At least JB Hunt is, with a reversal from the earnings last night, and then it has continued to rally here. We are now just under $100, so you got to think the big psychological $100 level. A lot of times they like to go a little bit through it, hit any stops. People are short, they hit a few stops, they're through $100, and then sometimes come back down. So $100 is going to be a big number for this on JB Hunt. But 3 days, 3-day rally here, 4 days, $85. This thing kissed 3 days ago, 85.16. We're now looking at it $100. So a tidy little 17% gain for those people who are buying at $85 there just 3 days ago. I will say the easy money has been made in JB Hunt now.
Could you say we have formed a base?
No, because it's run too far now. So you're chasing. If you're buying it here, this is chasing. I don't know if it's going to turn around on a dime and give it back. I can't say that. I'm not saying, but I'm saying I'm not coming in and chasing something up $7 when it already rallied $7 the previous 2 days. I feel like you're chasing. I feel like these stocks are still in downtrends. I mean, if you look at JB Hunt over the course of the last year, $130. I think you got some overhead supply coming when you get over $100, and I am not buying it. I'm not shorting it, but I'm not buying it either. So if I was long it, I'd probably say thank you very much, I'm gone.
I was saying on the dailies though, we got a triple bottom at around 85, 83. 80, that.
I mean, some of the stocks have been coming. Some of the the transports have slowly been starting to come back. I mean, FedEx is perking up here a little bit too. It's trading up a little bit in the pre-market as well. I own FedEx, but all these stocks have kind of been out of favor. So is this going to turn them around? Maybe. Some of them are starting. It's been a little bit about the dogs barking here the last few days too. I mean, we've seen some rallies here in some of the older stocks. It hasn't just been driven by tech here. Some other stocks have been rallying as well, though tech has done very well. But JB Hunt up 7 points. I can't see. It's just the chasing aspect of it. I'm just going to, I talk about this on the show quite a bit. I feel like when you're chasing stocks, you get run over more than you make money. And I learned this the hard way. I can remember back when I started break trading in 1999. And we had this, I was trading beside, I just get started. And I came in after, about 7 months after the office was formed. So everybody's, when I'm coming in, everybody's kind of feeling a little bit at home. But there's newer people figuring it out. This one guy was trading beside me, he was looking at NASDAQ level 2, and something would start moving. And he was like, oh, it's moving. And then he'd get on board. And then it would turn and reverse, and it would go the other way on them. And then it would start moving the other way, and they're like, okay, I'm going to go short. It's going the other way. It was always, just chasing the moves. And I watched that firsthand as I was learning, and I was like, man, you got to be getting on these trains before they leave the station, not trying to jump on a moving train, because when you jump on that moving train, you fall under the tracks more often than you make money. So I'm never been a fan of chasing, even since I started in 1999. If you make money by chasing, by all means, continue to do it. I just think if you're starting out, it's a tough gig, and I think chasing stocks is a way to lose money. Stocks up $7, I'm not buying it.
All right, there is more to the earnings parade. Johnson & Johnson this morning, Q2 adjusted EPS of $2.58 versus a $2.43 estimate. Sales 20.56 versus $20.29 billion. So they beat in the second quarter. They also raised their fiscal year operational sales guidance by about, 82 billion was the low end of the range. Now it's 82.4 billion, so a slight raise there. And they reaffirmed their adjusted EPS guidance for the year at around $8.60.
Kind of crickets here. It's trading up 50 cents. You're going to have, if this goes into rally mode, you'll again have an overhead supply issue because you broke down their 2 days go from 140. So you get up in the upper 130s. I think there's sellers all over the place. At 135, you're in the middle of nowhere. It's probably why it's not doing much, because you look at this chart and you think, I don't see anything there. You're digesting an earnings report, so you can have some excess volatility. Get up 138, 139, I think you find willing sellers. Maybe get down towards the low from 2 days ago to 132, maybe you find willing buyers. At 135, you're in the middle of nowhere. Sometimes it's just not a setup. I don't like swinging at pitches in the dirt.
Wow. Okay.
That's my analysis. Move on. We're pounding these through.
I haven't heard anything about any comments related to the talcum powder. I would imagine they would. I would hope they would comment on it, but I haven't obviously been able to listen to the call. I don't even know.
That's a wild card in there. I mean, I don't think it's going to be a major issue. It got hit before on that. I don't think this is something that's going to be knocking the stock down 20 points again.
All right.
Obviously, that crazy amount that they got awarded. There it's an appeal and there's all that stuff. So it's a wild card in there, but I don't think it's the main driver here.
Okay, the biggest bank in the world, JP Morgan Chase, Q2 EPS $2.82 versus a $2.52 estimate. Dramatic beat on the EPS there.
What is the beat? Give it to me again.
282 versus 252 for the Q2.
Wow.
Yes, dramatic beat for JP Morgan on the EPS. Sales were also beat 29.57 versus $28.9 billion. Let's see here. This is from Reuters. Fixed income markets revenue was down 3%. Equity markets revenue down 12%. But an overall revenue, top line and bottom line beat for JP Morgan.
It's a nice beat. We saw a nice beat from Citi yesterday too. It did not matter. I mean, did bounce back after, but Citi was trading up substantially in the pre-market. We talked about not chasing. We talked about bank earnings potentially fading. That seems what they do every quarter. Like clockwork, Citigroup did it too, so we got that right. Citigroup actually at one point in time, it was trading down almost $2. So in the pre-market, when we dogged it, it turned around and it started to tank. JP Morgan did trade up on this a little bit this morning, very, very quickly. You would have had to have an order out there to get done, but I believe it kissed over the 115 handle, and we have turned around, and now we're trading at 111. They just seem to sell these earnings, these bank stocks off on earnings. I don't know why. It seems like every quarter. Does it not feel like that, Spencer? It feels like Groundhog Day. Like every quarter, these banks beat, they rally them in the pre-market, and then when it turns around, and the dust settles, when the things are trading, at 10 or 11 o'clock in the mid-morning, they're red or they've, given back all the gains.
I mean, most of the banks beat most of the time.
They do.
It does feel that way.
So it's expected for them to beat. The expectations are just way too high. I don't know why they have such high expectations with the banks all the time. I mean, Goldman always blows it away. We're going to get to Goldman in a second. Like, they seem to always blow it away.
Usually.
And half the time, the thing doesn't even trade up.
Yeah, Goldman actually, they haven't missed
my nose here.
They haven't missed an EPS number. Goldman has since Q1 2017, but they.
What was the Goldman report? Because it's trading up here right now.
Right, Goldman EPS, as we're saying, they beat $5.81 versus a $5 estimate.
Well, they make a lot of money.
Yeah, sales 9.46 versus 9.13 billion. So beaten to beat for Goldman Sachs.
Stocks trading higher. Again, am I going to chase it? It's hard. It's hard to chase. This is a great beat. Any other quarter you think, man, it should be up a lot more if it's not a bank. But they just seem to, for whatever reason, not buy banks on good earnings. Now, you get later in the earnings season, maybe that changes sometimes, because then the expectations are, they're going to sell it off. And then you see them, they sell it off, and then they actually start popping it. So I don't know. It's a pretty big beat. Do I want to come in here and short it? Probably not. I don't like shorting into that much good of a report, but I'm also just scared to come in here and buy it because I just watched what happened with Citi. I watched what happened to JP Morgan. Could it happen with Goldman? It could. I don't think it's gonna with Goldman. I think it could hold on to the gains. It's a pretty big beat, but these things are wicked on earnings. They have whipsaw after 9:30 comes. There's some wicked moves. I mean, that tape in Citigroup yesterday is pretty tough to trade if you look at that intraday trade. It opened basically flat and then fell $1.50 in the first 10 minutes. And then it rallied $1.50 the next hour. So there's some wicked moves on here. And if you're good at, trading, maybe the fade trade is the play on these things on earnings. Just fading everything. And we've been talking about that, in the last year and a half. Fading has worked very well in a lot of different stocks. I mean, the S&P is really, yes, we're at all-time highs. But really in the big scheme of things, when you look at the weeklies, you've had a lot of whipsaw action. We've had a significant sell-off at the end of 2018, and then we rallied significantly. Then we sold off in May, and we rallied hard in June. Overall, fading has worked better than, trend following really in the last year. That can change again. But just keep that in mind. And I know Gil Morales, we bring him up a lot. He comes on our show once in a while. And he's been saying it's been the buy the dip, not buying the breakouts, basically not going, with the trend, but actually when it moves counter trend, buying that little counter move within the overall trend. That's what's been working. So, you go out to your longer term chart, go out to your monthlies. Is the stock in an overall downtrend? Then I want to be selling rips. If the stock's in an overall uptrend, I want to be buying dips. That's been working. So it still is overall trend following, but not chasing the immediate trend, if that makes sense.
Let's take the last one there and group them all together. Wells Fargo this morning reporting.
A lot of banks. Holy cow, banks galore reporting.
Still waiting on Morgan Stanley's next week, I want to say. Bank of America as well. But Wells Fargo this morning, Q2 EPS $1.30 versus $1.15 estimate. Sales 21.5 versus $20.9 billion. So same story here, a beat and a beat.
They hate Wells Fargo. I don't know why. Wells Fargo has been the underperformer in the sector for a long time. I mean, JP Morgan is not that far from all-time highs. Citigroup, you can forget about all-time highs. It'll never get there because it's like $500 a share from
there was only one winner here, and it's JP Morgan. That rule has applied for the past.
I mean, Goldman has come back a long ways from the lows, but Wells Fargo is just kind of hanging out. I mean, bringing the chart from last 2 years, $65 in 2018. End of 2019, end of November 2018, we're $50. $46. The low of the move was back May in December when we got down to 43. It's a stock they just don't. I don't know why. There's of the banks, and the banks have been underperformers as a whole, but Wells Fargo has been an underperformer within the banks. So if you're looking for best of breed and worst of breed, JP Morgan has been best of breed for a long time, and Wells Fargo has been the worst. So I don't know why that is. It's a more conservative bank. It's got a decent dividend, but it just hasn't performed. So I don't like buying the dogs of the group. So I'm not going to buy Wells on this pullback.
Did you know that JP Morgan is the largest individual employer in New York City?
I'd imagine they got a lot of
employees.
employees.
They employ more people in New York City than anybody else.
I mean, this is an argument too, and we don't have to go into crypto here, but I mean, we've got all these crypto believers that they just want to end the banks. Okay, well, how many people do the banks employ? I mean, how many jobs are out? There's a lot of people who are employed by banks. Like, just quickly look, how many employees does JP Morgan have overall?
Gosh,
It's gonna be probably way over 100,000, I would think.
Yeah, tens and tens and tens of thousands. Yeah,
maybe hundreds.
Let's see.
See if you can find that information fast. Somebody has it there.
Probably they do, but
I mean, everybody in the crypto world wants to end bankers. So I don't know. These people are gonna have to find jobs somewhere. I don't think that's there'd be a lot of jobs lost if we lost all the bankers. I'm trying to find it too.
200 as of the end of the year, 256,000.
256,000 people just at JP Morgan. You think about how many banks are. There's a lot of people working in the financial sector. My wife brings up a point too. I mean, here you have Bitcoin. They're saying this is going to end. The hardcore crypto people thinks it's going to put an end to the banks. Well, the banking. My wife brings up a good point. Former banker, my wife as well. But the banking is a lot more than just transactions. There's a lot going on there, like insurance. You think about everything that happens in the financial industry. So to just say that crypto is going to come and put all the banks out of business is nonsense, in my opinion. And we know the transaction, of crypto itself, isn't that easy. It's not that smooth on Bitcoin. It seems to take time. It sounds like it costs some money. They haven't really, got that figured out there yet, too. So I don't know. I'm still long term. Like I've been on the Bitcoin bandwagon here because the technicals have looked good for a while. But I'm not on the long-term bandwagon that I believe crypto's coming and we're going to be taken over and we're all going to have a crypto wallet, because I see this go by my timeline all the time. And I don't even follow. Like, crypto's got such a cult following. I hardly follow any crypto people, yet I still find it's all through my timeline because my non-crypto people that I'm following are talking about it. So I think, when you just think the banks are all going out of business and it's all going to be crypto wallets going for it, I think that's wishful thinking. By the crypto people.
But that doesn't have to be victory for crypto. It does not have to be the end of the banks. This isn't binary. They can both coexist. And
they can, and I think they will. I think there is a place for some crypto. So it's a good point you're making. It's not, you're right. It's not a binary thing, but there is the crypto cult that believes that I believe in Bitcoin because they sell it like that. I mean, there's some of these crypto, and we're not saying everybody in crypto is doing that, but some people are selling it like that. Like, okay, this is going to be the future of banking. We're not going to need bankers anymore. So don't worry about your Bitcoin burning energy like crazy, because think about all the energy that the JP Morgan building burns, or use there. Those are still going to exist. You're not going to get rid of, every employee at JP Morgan because we have cryptocurrency. I think it is going to coexist. So then when you look at it from that perspective, the energy usage on these cryptos is pretty damn scary. I mean, we know, they do it up in Iceland and they do the mining where it's cheaper, but it costs a lot of money to mine a Bitcoin. It costs a lot of money in energy, to process these transactions. So I just think long term, I think it's not as clean as everybody says it is.
And you can say that for any emerging technology. You can say that for Netflix as the future of movies. Does that mean people aren't going to the movies? No, of course not. AMC made $4 billion last year.
There's still people going, but if you look at that AMC stock, you can make the argument that maybe people will eventually not go to the movies.
People can go to the movies.
It's $9.
And watch Netflix. They can do both.
It's got an 8.4% dividend. It's $9.
All right.
I might make the argument that people might eventually not go to the movies.
But my point was not that. My point was that these emerging technologies are going to coexist with what's already around, and the banks aren't going to die. If you think that
banks aren't dying,
and I hope
people who say that the banks are gone because of crypto.
Maybe they will in 150 years.
No.
I won't be around to see it.
Financial services are still
not my problem. Let's go to Domino.
Everything will be done in different ways. I mean, your banks are going to have their own cryptocurrency. You have a JP Morgan coin. You have a Jamie Dimon coin. Why not?
No. Didn't they already make an announcement?
Yeah. I mean, why not? Why can't you? They're all going to have their own coins.
They should.
They
Right.
will.
Okay.
Okay. This really went on a bad tangent. Continue the earnings parade.
Domino's Pizza, everyone's favorite technology company, getting crushed here.
Kramer's favorite technology company.
Okay, Kramer's favorite technology company. Q2 adjusted EPS for Domino's was a beat, $2.19 versus $2.02, but the revenue was a miss, $811 million versus an $836 million estimate, and they have fallen through recent support.
You have that blow off high. What happened back on April? Was that earnings, the last year earnings report, April 24th?
Yes, it
When
was.
it went to $300?
Yes, it was.
All right, so there obviously was your upside capitulation. Sometimes you look at moves, and when stocks been going up for years, you wait for that like capitulatory move where it's like, okay, everybody is in here now. It had a huge run, and I know it got back up there, so it's like you can even argue the double top thing because we go to the monthlies. You can see back in August 2018, it got up to over $300 too. It tried a few times, get over $300. It could not do it. It started to come down. How much money did they make?
Oh, I just pull it off my screen here.
$2? The PE on this thing is high because it's been growing like crazy.
Yeah, $2 and change.
So the multiple is high. Not that we're big PE things, but it's something to consider when you're buying a food.
Well, of course it's high. It's a technology company.
Well, that's what Kramer says is a technology company.
That's why it's high.
It's online.
That's why it's high.
It's viewed favorably, but I mean, okay, and some of the other restaurants run 20, 25 PE, so it's not absurd if Domino's Pizza's running at 30 or 32. It's not crazy. You know, at a certain point in time, this thing gets down $200 again, it's probably a buy. I think I wait for the dust to settle a little bit. Well, you know, we give you a level. If you're trading it, let's go talk to the traders here. 240. That's where you got to back in March. This is the level if Joel was on the show would be talking about.
Oh, yeah.
Multiple lows back in March. Yeah, we dipped through at 239. Call 239 to 240 major support. If I was short the thing, that's probably where I'd be bringing it in. And if I wanted to buy the dip, that's probably where I would start looking, is that 240 area. I think if you're looking at 249, you might be early, although buy the dip has just worked for a long time. So in this market, it's still a stock that is still loved. So there will be buyers for this somewhere. People licking their chops down 20 points. There are probably a few of them. Probably some people probably try to buy it off the hop. I think you get a shot at 240.
Today?
Not necessarily today, but I think you get a shot. If you're a swing trader, I think you could see it today. It's down 20. Why can't it go down 30?
Yeah, that's true.
It could. So I think if it got to 240, I think I'd maybe try for the bounce there even. So I don't know. 249, you're kind of in the middle of nowhere to me. So I'd say I'm not swinging anything here. But if I was short it, I maybe bring a little bit in right now. I'd bring the rest of it at 240 if it got there. That's how I would play it.
All right. 8:28 here, a minute before we're going to imbalances. Sure. We covered the big earnings. You know what?
Anybody we missed from earnings?
No,
parade?
Not really anyone that I have been writing down best I can all the tickers mentioned.
What about CP? Is CP report yet? Still waiting on them.
So we can get to CP.
I think we're waiting on them.
They're not out yet.
8:30 as usually. CP at 9 o'clock. They're later. Canadians, they gotta be late.
Yeah. I have been writing down the tickers in drop in the chat so we can get to those now, or we can do them after our guest at 8:30.
Well, Nick likes the tickers too. Why don't we pump through? Actually, Nick, I was talking with him. He's requested ticker time. He loves it when we just throw him under. We give him a ticker. You got 30 seconds. Give us a chart and give us your technical analysis. Let's save a lot of these tickers for Nick, and he's coming on in 5 minutes.
Got 8 of them.
Nick's fast. He's quick with those charts, man. Nobody's faster with the chart than Nick.
He is quick with the charts. Other than that, biggest thing I wanted to discuss. Oh, you know what? Did you end up trading the semantic thing yesterday, or was that because that happened after our show? The deal got called off.
No, it happened right after a show I did. It was so fast.
Yeah,
it was selling off. So, and obviously some people have a faster feed off CNBC because David Faber broke that on CNBC, and I was watching it live. Like as he's talking, he's like, okay, well, let's go to this now. And he said, like, let's go to this now. And it started tanking. And then like 5 seconds later, he says the deal is, the talks have broken off. And it tanked. It went down like $18. Who's selling that at 18? Getting excited. Man, there's no liquidity in the pre-market. You can't just hit the sell button and hope for the best. The thing was at 22 when the deal got announced. Anybody who's bought that at 18, 19, genius. Anybody who sold it down there, you're not reading where the chart was. It was $22 when the deal got called, or when the rumors started. So why is it going to go down to 18 when the deal's broken off? So anyways, it got down there in the 18, 19, 20 handle very briefly, and then it found its home where it should, right over the 22 handle, because that's where it was when these talks started. So not surprisingly, obviously, gold just tanked. Did we get a number?
There was a couple numbers. Man, I gotta start warning you on these numbers. Then there was a couple
Gold
numbers.
just tanked.
I don't think any of them were supposed to be super significant. What were they here? I go through all my stuff in the morning, and then I don't like retain any of that information. So our retail sales we're supposed to get, or I guess we just got, import prices for June. Those were the 2, 8, and 30 numbers. Unless retail sales, they were okay. They were better than estimates at 0.4% versus a 0.2% estimate. I don't know. And import prices were down.
I didn't move much, but gold tanked on that.
Import prices
fell well, $7 on it, not tanked, but fell $7.
All right, imports were down a bit.
Tanked to a day trader like me.
Retail sales up a bit. So, yeah. Wow. I don't know. Remember when was it when? Because econ data never used to move the market in the pre-market, and then a couple of years ago there was a period of time when all of a sudden everything moved the market. I don't remember why that was. It was like early 2018, late 2017. Do you remember what I'm talking about?
Well, it used to just be years. Okay, so a while ago, everything moved the market, but then we were joking. We were saying the only number that matters is the jobs report.
Right, and then
the only thing that's moving the market. Now we're seeing other economic data. It's all about the VIX too. When the VIX gets a little bit higher, it starts to move a little bit. But right now, there's so much looking at the Fed. Like people trying to figure out, are they going? What's going to happen here at the next meeting? They're going to go another quarter. So all this data matters right now. When the Fed's is kind of complacent and not doing much, then it's not a Fed-driven market. Economic data doesn't matter as much. Right now, this is a Fed-driven market. We are stuck to headlines. What's happening with interest rates, and that's why you're seeing economic data matter more. So I will say, when you're in a Fed-driven market, and people argue you're in a Fed-driven market all the time, to a certain extent they're right, because the whole market's rallied over the last 10 years because it's been driven by the Fed. But in certain times, that the Fed is more quiet. Right now, the Fed is not quiet, so economic data matters. That's what I'll say.
Mm-hmm. All right, let's go to imbalances.
Anything? GE forever and ever sell imbalance. Whoever is selling GE for the last 2.5 years on the open, I mean, it's like clockwork. How long have we been talking about the GE sell imbalance? I feel like they've been selling for years. It must be like the biggest holder ever that had this stock, and they just slowly sift out of a couple 100,000 shares a day. 400,000 to sell GE here this morning. It's like clockwork. It's always got to sell imbalance. House of Mouse Disney, 44,000 to sell. That stands out a little bit there. Disney has been kind of just pausing for a couple of days here after a nice up move. Pfizer, 150,000 to sell. That stands out to a certain extent. Merck, 37,000 to buy. That's going in the opposite direction. Merck had a buy imbalance yesterday, and I actually had an okay trading day. Full disclosure, I have both those stocks in my long-term portfolio, but I'm not trading them. Visa, 37,000 to sell. Johnson & Johnson, which just reported, has 37,000 to sell. Sometimes these things come out with the imbalances that can really move, because J&J was trading up ahead of that one, ahead of 830 imbalances, and then the sell imbalance came and it took it red. So sometimes when a stock is looking for direction, trying to figure out which way it wants to go, the imbalance data can move it. So if you're trading an earnings stock, it's always a good idea to keep an eye on the 830 imbalances, because they can sometimes move it. If a stock's just wishy-washy, you can't figure out which way it wants to go, big sell imbalance can knock it down. J&J did have 37,000 to sell, which is why it just turned to the red. Wells Fargo, 28,000 to sell. Goldman, small, 4,200 to buy. It's really small. That's pretty much it. They're pretty small. I don't know if JV Spec, if we see any out there that notable, let us know.
All right, let's go to Nick Chahine. I'll bring him on right now. He's the author of Create Income with Option Spreads and sellspreads.com. Nick, good morning.
Good morning to you guys.
How's it going?
Pretty good. Good couple of weeks.
Good couple of weeks. That's good. Tell us what kind of trades you've been up to.
Caught a lot of good momentum runs on Tesla. Amazon was a massive win We caught it really early, and we made a bet for this week, and it just totally paid out. Facebook was also a good win. So and Square. So we worked the charts, and it worked out pretty well. And some people in the chat room just jumped on a few ideas that pointed out a few ideas, and we just jumped on it and ran. So on top of all the fundamental stuff that we've been tracking, being at all-time high is kind of a ginger situation where it doesn't take much to scare people out. But we've been managing the range, and the range is so far good. Like yesterday morning, the S&P futures had one giant candle on the 5-minute mark that is about 5 points wide, I think, and we're trading inside of it since then, kind of. So I would keep an eye on that as far as limit for the day.
All right, Nick, we've got some. I've been told that you want some tickers from the chat. I have.
Oh yeah, last time a couple of weeks ago, I mentioned, hey, why don't we go back to a fast fire situation?
I have some for you. Let's start with Tesla, and I swear I didn't. This is all from the chat, not me. So Tesla.
Yeah, Tesla. We found a little crack as far as technically speaking, and we went long. And I said, there's so many. It had a 35% short float interest in it. So
something crazy like that, yeah.
Right. So it doesn't take much to move it, and then people will cover. So I thought to myself, it's going to be a good gamble, and it was a lotto trade, and it paid pretty well. And I have to tell you, this last weekend, I was out and about. I live in an area where there are a lot of Teslas anyway, but it was a ton of Model 3s. I mean, they were like everywhere. Maybe I'm looking more for them, but they were like all over the place.
I'm seeing more too.
Yeah. So maybe they surprised one way or another with the deliveries or the bottom line or something.
I gave an argument on this show a week ago, not sure if you were listening, but stock was trading around 232, 235. And I was like, I don't think it's going to zero. And I gave the trade and saying you could rate the 135s going out a year and a half, and you could get like $25 for it. It's crazy premium in those, like going out long term.
I did. I mentioned it here. I think mentioned the February.
Yeah, you mentioned it once too.
135, and I collected over $20 for it.
Yeah, I mean, if you think, and I believe that Tesla's not going to zero. I don't know if it's going up or it's down, but I think if it got down to $100, I think there's going to be some people that might be interested in potentially, doing a hostile bid or something for it. That's why, I think that's in my opinion, I think it's a good trade to be right.
You can basically make $2,000 on 100 shares with no money out of pocket.
No money out of pocket. And the only time you're probably going to lose, you're going to lose on a trade if it does go to zero. I mean, because if it goes down to $50, it's probably
somebody will buy it.
I think so too.
Yeah.
So, and I think Jeremy Newsom, I think somebody would buy it down there. So that's why I like the 135, or that we were looking at before, and you get $20 for that. Good premium.
Yeah, so if back to the Tesla right now, it's in a zone. If you look on it like a weekly chart really long, and you go back to 2014, this has been a pivot area since then. So it could be sticky. So it's not going to slice through it like butter from here unless there's a headline. So if they have a headline event coming, then I'm leaving a lottery ticket in there with house money. Let's put it that way.
All right.
Let's fly through these tickers. Let Spencer take it. Nick wants to do
Shopify.
We're going to do 10 tickers in 5 minutes. Go.
Oh,
okay. I didn't know we were doing that.
Shopify, it's near its all-time high. Incredible trend. I wouldn't short it unless I have a reason to do it. Obviously, it's not cheap, but it's got a good reputation. So ride the momentum and pick the pivotal zones. Like 300 seems like an area that they could come back and test, and that would be okay. Right now, a little bit more, and it breaks a descending trend line, so it could see 340 again. But
I think Canadian investors still driving this one, so I'll take you off the clock for a second because I just want to comment. Canadian investors still driving this. Is not a lot of good tech stocks in Canada. Yeah. And I think this is one that gets a lot of love probably from Canadian investors, because if you're investing in tech in Canada, there's not a lot of places to go, and Shopify is one. So it might trade at a premium because you have all this Canadian money looking to invest Canadian dollars into tech, and there's not a lot of good tech companies. So
I'll give you a hint on that chart I just posted. There's a little jagged red line ascending, and it bounces right off of it. As soon as it breaks and closes below it, it's time to get out.
So keep your eye on that little red line.
Wait, Dennis, are there a lot of like Canadian tech indexes that ETFs track that like ETF buying?
There's nothing good in there though. Like I'm a Canadian. I have Canadian money, and I find myself just holding U.S. dollars
You
just to
got
invest
money?
in U.S. tech because there's not a lot of good Canadian. I have a currency exchange risk when I'm holding U.S. dollars. I have a currency exchange risk because my expenses are obviously in Canada because I live in Canada. So when you look at it from that perspective, I would like to invest in Canadian dollars. I don't do that because I believe firmly that technology is still the place to be, and there's not a lot of good companies to invest in Canada. Would I own Shopify? It's not my style because the P is crazy, but I think it is the style of a lot of people that they just want to own tech stocks, and Shopify is probably one that a lot of Canadian brokers are buying on pullbacks every single time.
All right, this name is reporting earnings tomorrow. Netflix.
Okay, so that's probably best to play through other guys. So I have winnings in Facebook. I'm going to leave some on as a play on Netflix because as Netflix goes, it's going to influence all the tech plays. Netflix technically had a good setup, but I passed on it because it has had that same setup several times of late, and it disappointed me every time. And you can see it on my chart with the orange line. I gave it a little extra room than the actual technical trigger because of the disappointment that happened before. And there are a lot of lines on this chart, but only few count. And if you go left enough to see a little white box in last October, this was the accident scene for Netflix from the October correction. The S&P busted above it, but Netflix is still struggling through it. So it's obviously a very sensitive line. Once they go above it, if they go above it, it will carry higher. I am not as optimistic on Netflix. I do not want to be long Netflix when Disney releases the numbers on the signups for its platform. I think those numbers are going to be huge, and it just influences psychology. Not that it's going to hurt Netflix's bottom line, but psychology.
Well, I would hope we would get that number in February or so, but you never know if they'll release it. I would hope we would, though. All right, moving on. Next on the list, Anheuser-Busch, Budweiser, BUD.
All right, I don't watch it, so it'll be good to see. So Budweiser is back to a level that it has had issues with it back in, again, October. They came about and broke through it in April, and now they're testing it again. So it's pivotal. To me, pivotal levels usually are sticky. So if you're coming down to it, it's going to be somewhat supportive. If you're going up through it, it's going to be resistive. So maybe it finds some support here. I don't know where it is this morning. Hopefully it's above 85. Otherwise, I'm saying something.
Yeah.
So 85, any dips to where 85, I would sell puts in it. And as long as it's above it and I'm long, I stay long it because it's working its way back up.
Hershey.
I don't know the ticker. What is it?
HSY.
HSY. Well, a lot of food and drink here. Almost like Shopify, only it has a defined line up top. So there is a higher low trend and knocking on a roof. So if the higher low trend breaks, then it breathes lower, but there is something to shoot for down there. So this one is also above a moving average. I bet you pick a time period and you'll come up with it. And as long as it trades above it, it looks like there are machines that buy it as soon as it hits it. So I stay long it as long as that relationship is good, as long as there are higher lows knocking on the roof eventually will break and it will go through 140. But I don't know which way. It's pinching. So a move is coming. The direction will depend. Follow the direction, the breakout in that direction. If it breaks down, you can follow it down to 33-ish. Or if it breaks above it, you can chase it higher.
Back to tech, Western Digital.
Okay, tech is pretty good as far as movement. Western Digital, I don't know if it's my favorite. I have traded before, but I sold puts in it versus me expecting a run. I was in Xilinx a little bit, but Western Digital is coming to a big pivotal line. So if I have profits, this is where I would get out. Not because it's going to fall, because it's a sticky point, like I just said. This is a perfect example to coming up into a pivotal zone. It failed last time it was here back in April. You can argue for it that it failed in March. You can, the accident happened last October. So they've had two pushes on it. And I don't know if it looks like a cup and handle or because both troughs are about the same size. To me, it looks like resistance, and I would rather be long something else if I want to stay long. Like pushed into AMD recently, and we'll see if that pays out. Rolled some profits from one momentum stock to another. So the bunch is good so far, but who knows where the headline is going to come out from.
Microsoft.
Okay, great company, obviously. People argue, is it too expensive or not? Doesn't matter if they're still delivering on what they're promising. Markets are all-time high. This one is all-time high. Clearly, it's not an ideal way to chase at all-time high. So if I'm in it, I stay in it. It's market dependent. Technically speaking, there's not a lot to say except it's higher lows pinching into, it's a very steep rising wedge off of the December crash. It's 50%, 48% eyeball up. So it's time to either commit to it for the really, really long term or book it and try to chase it at a better entry point. It's not an obvious entry point up here. Closer to 133 would be much better.
AMD.
That means I'm not calling for it lower. I'm just saying.
Okay.
So you can see AMD. I have lines, and so the target on the first line is complete for me on my chart. But if you look above it, there's a bigger weekly target that if something else triggers here, it could be something fantastic. And I'm trying to get you the weekly vision on it. The weekly chart. Anyway, it's messing up. It's clear that it's an all-time high. It has had 2 pokes. This is the 3rd poke at it. They say there are no triple tops. I don't know what the heck that means. But to me, it's trying to bust out. And I would not be surprised to see like a $6 or $7 run if they break through it.
John Deere, DE.
All right, DE. Okay, so they are attacking a zone that has been failure up until now. So it's kind of looks like an inverse head and shoulders. Not quite, not perfect with the neckline and all of that, but the spirit is there. So they're trying to break through at several attempts at a neckline. So once they break through the neckline, if they break through the neckline, they will overshoot higher because the bears will be tired from defending that neckline. It has kind of an inverse head and shoulders with lopsided shoulders, but a definite dip on earnings last time. I don't know when they report earnings next time. That seemed to trigger something after the earnings last time that they rallied quite a bit from May, 25%. So I would put this is where I would put an alert in my system to see 169.5 or 170 to be safe. The last failure is 170.2. So I would put an alert. Hey, it's above 170.2. If it closes there, it might trigger something to say 177.5 or maybe 180. But I wouldn't want to anticipate it unless I know something about it fundamentally.
All right, there's just no way we're going to be able to get to all these tickers in the chat. We'll do a couple more, then we got to let Nick run. Let's do Roku.
Oh boy. Okay, so I hate this because I don't hate the company, but I want to short it. I have tried to short it. I won once or twice, but then I bailed on it. So they've been in business for 16 years and they still lose money. So I just don't see how this time is different, except that they are seen as the aggregator of content. And the more content providers that there are, probably the more odds of them making money. But it's so easy for somebody else to push them out that I just would be very afraid for my money if I was a winner. So I do see lower highs. I want to see where that goes. So there's a tight situation here, 99.50 and 106.30. I would keep an eye on that. A breach of that area. It's not a hard line in the sand, but a breach of that little tiny zone might have some momentum in that direction.
The easy bear case on Roku is be afraid of anybody who competes with Amazon and Apple, which they do. But I own Roku and I like it. So that being said, let's move on. Let's do one more here, and let's do Merck. They report this week, I think.
Okay, so I like it for an entry point right here because, but to me, entry point meaning selling puts, for example, since it had a nice little dip for Merck. I don't know much of the fundamentals. I know they are managed well. They seem to be a survivor for a while. Maybe the political rhetoric had something to do with it. But as far as levels, this level around 78 is pivotal, so it should provide some support. The point of control is for the last, I don't know, a few months, 8 months, is a little bit lower than that. That's even stronger support. So I'm very comfortable selling puts into dips. As far as rallies, I'm not sure if 86 was too much. Maybe I would put a goal of 84-ish if there's a rally. So if I'm long and I'm thinking it's going to rally, that would be probably my exit point.
All right, we've been on the line with Nick Chahine. He is the author of Create Income with Option Spreads and sellspreads.com. You can find him on any of those sites or on Twitter at Racer Nick, at Racer NIC. Nick, as always, thanks for your insights. Thanks for your charts. And we will talk to you in a couple of weeks. Great
session, guys. Talk to you later. Bye.
All right, have a good one. All right, it is 8:51 here. Dennis, what are you watching?
Just SPY moving nowhere. So gold continues to leak a little bit.
Waiting on CP. Haven't gotten it yet.
Yeah, we're still waiting on that one. I mean, there's a lot of sell imbalances here this morning. So I tend to think SPY is going to go red. Just because I don't see a lot of buy imbalance. I don't see the driver to take us higher here. Yeah, oil's up a little bit here, but even some of the oil stocks have sell imbalances on them this morning. So I don't know. I think we're going to take SPY red here eventually. Right now we're just trading up, a point here or something. But I feel like we're going to go in the red. So I've kind of been leaning to the short side a little bit, at least for my pre-market trading. Yeah. So just say, geez, over 500,000 to sell now. The same thing. Same sell imbalances. JV Specs Accenture. That's got a pretty good sell balance on it too this morning. It's got 30,000 to sell, which is big for $195 stock. So a few sells, but again, we've got a lot of bank earnings here this morning, so we're going to have some whipsaw action there. So I continue to watch the banks. JP Morgan has rallied a little bit back from the lows. Wells Fargo still hanging out. If we go to Goldman, it has kind of held on the gains pretty well here. Trade up $2.73. Schwab's the only one we did not cover. SCHW. Did we have the numbers? Because it's not doing much.
Schwab is out. They don't. I don't know how much they typically trade off their report, but the EPS was in line, 66 cents. Sales beat 2.68 versus $2.67 billion. But this is not an active name in the pre-market typically. So
one thing is TLT is tanking. So TLT off those numbers is starting to go down. That is always good for the banks. So I think banks on weakness here could potentially be a buy because you have a TLT factor happening too. The earnings are going to trump that all day. But if they're looking for direction, TLT is going to help the banks a little bit there. So that's traded down there too. So there is a few stories here. Again, overall, we're looking at Schwab. It's bid up at 40.50, just traded 40.98. I don't know what happened yesterday when the thing went to 42. It looks like some type of little it looks like there was a big move there very quickly. Maybe that was just some exchange stuff going on there, different exchanges. Sometimes prices trade through. I didn't see that trade, so I'm not sure what happened, but quickly traded 42. But that would become a line in the sand for me, where I would think there'd be resistance there because it is sitting on everybody's chart, that 42 handle from yesterday. So keep an eye on that level.
What about just the tight range we had in the SPY yesterday? It was a quiet day.
It's quiet here this morning too. I mean, you do see this, like everybody's buying the dip. You get a little bit of a dip, and they're coming back in there again, and everybody's just kind of you get into the summer months, right? July, August is typically slower months. If I look at my P&L over the years, I typically make the least amount of money in July and August, and that's because there's less volatility in these months. So I think you're going to see that until you get to September, where you get some catalyst. There's always individual stories. We're in earnings season, so you can see some movement because of that. But typically the summer months are kind of quiet. So not surprising that you're going to see volatility start to come in here a little bit in the summer. Earnings is going to help volatility at least for the next month, because that's when we really get into the heart of it. But after that, in middle of August, it's going to be crazy.
It's going to be dead. It's always the worst time of year if you're a news.
Dog days of August.
Yeah. After this earnings season will typically go 3 to 4 weeks for the bulk of it. So, yep, the second half of August is going to be rough. Let's go to ratings here. Because we are in earnings season, the ratings are going to sort of take a back seat, where I'm not seeing a ton that interest me this morning. There are some that maybe we'll highlight here. Freeport McMoran, FCX getting an upgrade at Barclays to equal weight. A number of initiations that interest me. Excuse me. Goldman Sachs initiating Fiat Chrysler at a sell. That's notable.
Yeah.
What else do I
Trading
got?
down 3.5% on that.
Yeah. Wingstop getting a downgrade from Wedbush to neutral. Is Wingstop
I
still?
thought Darden was downgraded too. DRI.
Yeah, at that was at Maxim Group, right? To
Maxim, yeah.
Yeah. What else am I seeing? No, nothing super crazy. Is Wingstop still at those all-time highs, those crazy highs?
Yeah, it's been a good performer. So when you get a downgrade here, you will see some profit taking in this today. So I'd not be surprised if it loses $3 or $4 on this. It's offered down the pre-market 96.43. Best bet is an odd lot way down at 91.98. And then 90.70. So I would not be surprised, like when you get these moves and the stocks move from $80 to $98 in the course of a month and a half, that there could be some profit taking on this today. So I wouldn't be surprised to see this in 93 handle, 94 handle today.
A number of Slack initiations, mostly neutral, with the exception of KeyBank, who is overweight.
Doesn't move
on Slack.
This Slack is just quiet.
Street high price target here is $45 from Barclays.
Quiet. The line in the sand is going to be 33.37. I mean, yesterday's low got down to 33 handle there, so you absolutely want to see this hold in 33. You wouldn't want to see it make new lows. So if you're coming here and buying Slack, my stop out would be below that 33.37.
Someone had asked a question in the chat about what was it? Cracker Barrel. They have got a special dividend or something. I don't know if that's being paid out.
They announced a special dividend, or they're paying one?
They didn't announce it today. I think it's maybe being paid out today is why he's asking. They announced it on June 4th, CBRL. Yeah, $3 a share special div. I don't know if the payout day is today, but
it's when it goes ex-dividend. That's the important day. My system did not adjust the price. I have two separate systems, neither adjusted the price. So I'm assuming it's not the ex-dividend today. Is it the payout day? Maybe, but it's what matters is the ex-dividend day. Payout day is meaningless. That's just the day that actually the money gets into your account. It's kind of like you earn the money on the ex-dividend day. Right. You get paid as the pay date. So payday, I never even look at. If it's ex-dividend date, those matter because on the ex-dividend date, the price will adjust down that $3 for the special dividend.
All right, 8:58. Got a couple minutes left. Did we miss anything on our list? I think we got everything that I wanted.
I mean, we're right into coming into the heart of earnings season. We're going to get UAL tonight. We're going to get CSX tonight. We're still waiting on CP here this morning, so that's always interesting as well. And then later in the week we're going to get Microsoft. Who else? Highlights.
Tomorrow, Bank of America, Progressive, eBay, IBM, Netflix, Alcoa.
Huge.
That's all tomorrow after the bell, or not actually Bank of America.
I mean, let's talk Netflix just for a second here. Stock has been coming down for 2 days, so it's going to be a little lower expectations maybe coming in this report. When is Netflix? Tomorrow after the bell?
Tomorrow after the bell.
Sometimes you see a little bit of life. Well, I might try to play Netflix like for an overnight trade, just not in the earnings, but for tonight, because sometimes you see a little bit of life ahead of the earnings day there where there's some hope. So we'll see what it does today. It's up to $2.66. Is there a headline on Netflix today?
No.
Anyways, it's already getting bid up here, so I guess I should have bought it yesterday.
I did read an interesting story in the New York Times just about how the Netflix lobby in their headquarters is like the new place to be seen, if like in Hollywood to see and be seen. Did you buy a Disney like I told you to?
No. When is the preview day?
Thursday.
I usually buy a day before the preview day, so I'll be buying. I got to write it down to buy Wednesday night.
All right, I'll remind you tomorrow then.
Remind me again tomorrow.
Okay, I'll put it on the list. All right, that'll be it for today's show. Thank you to Nick Chahine. Thanks to all of you for participating and dropping tickers in our chats, both on YouTube and premarket.benzinga.com. Any questions, comments, concerns, email us, premarket@benzinga.com. If you missed any part of the show, we have a podcast, iTunes, SoundCloud, Stitcher, TuneIn, Google, basically anywhere the podcasts are available. And that'll be it. So everyone have a good rest of your day. Dennis and I will be back with you on Wednesday.